Snipers, you have to see what's happening at the Bitcoin price this Friday as we're heading into the weekend, and I have a very specific game plan for Bitcoin because check this out, snipers. For the first time since March of 2020, the NASDAQ closed a daily candle testing its 600-day moving average. Why is this significant? Well, the last time we tested the 600-day moving average was in March of 2020 when equity markets began to see a reversal back to the upside. And the only other time that we came to test the 600-day moving average before 2020 was in 2018, where we also found a bottom for the NASDAQ and reversed back to the upside. For those that don't know, the NASDAQ is the technology index in the equity markets. And so could we say that Bitcoin right now has the potential to form a reversal inside of this range of 36,500 and 34,788 to form its third and final higher low to then see continuation of the upside? Well, here's what I'm looking at this weekend, snipers. If we know there is potentially a bottom in sight in the near term, maybe we see another couple daily candles for the NASDAQ test at 600-day moving average before we see this reversal. But if we know it's coming soon, the question is, would it be smart to maybe start dollar cost averaging into a leveraged position for Bitcoin, possibly during this weekend, because it's the first day the NASDAQ has tested the 600-day moving average, and now we're heading into the weekend. Well, here's how I'm playing this scenario. I am expecting a reversal soon for the technology sector, and that would also include Bitcoin. Now, I would love to have a leveraged position in Bitcoin at these lower prices if we start to head back above 40,000 US dollars. So here's what I'm waiting for this weekend, snipers. I believe that Bitcoin, either with this next daily candle or the one on Sunday, will come and test 38,000 US dollars. I also have a belief that because there is no reason for Bitcoin to fall further below its 100-week moving average where we're currently sitting, because the S&P 500 has yet to breach below its 100-week moving average, that right now there's a potential that Bitcoin will form its third higher low in between 36,500 and 34,788. And so what I am waiting for right now, maybe in the next hour as we see the new daily candle open, we see some volatility, but if we can see just a little bit more volatility to the downside, where we could get a strong entry inside of this range as close to 34,788 as possible, I think that would be the first place I'd start to dollar cost average into a leveraged position for Bitcoin. Now, is there a potential as well, because it's the weekend, anything can happen, all cards are on the table, that we come below 35,000 US dollars for a wick? Absolutely, which is why I would start dollar cost averaging inside of this range. But if we see any further price action down inside of no man's land, which is below 34,788, then I would start to add to my position, and I would set my stop loss at the current low, which, if we were to just look at the consolidation low that we have so far, we're looking at $32,917.17 on the dot. And so down to 33,000, we could set a stop loss, a very tight stop loss, enter into a long position. Not just yet. I'm going to wait for this new daily candle to open up. Maybe we'll see some volatility to the downside with that candle. But if we see price action towards 35,000, I am going to start entering into a leveraged long position for Bitcoin in expectation of a third higher low forming. We had $400 million of liquidations already. We've cleared out the leveraged positions. Now it's time to enter into leveraged positions, in my opinion. At least the time is coming here very soon, with the NASDAQ potentially set to bottom at the 600-day moving average, which it tested for the first time today to close. And it's clear that it tested its 600-day moving average because we see a lot of equities selling off to close the day. MicroStrategy down 6.45%. You can see below its 200-week moving average. Is this not a potential bottom? At least in the immediate short term, I think that for the first test, it could certainly be. While everyone is fearful, it's time to start looking at positions. You can also see here, if we were to just pull up the QQQs, against the money supply, this is a chart not many people are looking at. What you'll notice here is we are also below the 200-week moving average. And what's interesting about that is in March of 2020, when the TQQQ, or I'm sorry, just the QQQ, the TQQQ is a 3x leveraged version of QQQ, but QQQ against the money supply, when it came down below its 200-week moving average, in 2020, it bottomed out as well. So the puzzle pieces are indicating it might be time to start entering into a leveraged position. Why would Bitcoin really see much price action below the 100-week moving average this weekend if the S&P 500 has yet to do so, right? So the 100-week moving average sitting right around 36,400 right now for Bitcoin. I expect Bitcoin to get to that place, maybe even come to 38,000 to test its weekly and monthly open this weekend. It is certainly on the table. And the VIX, you can see, did come up to test its weekly and monthly open, but got rejected, so it maintains itself as a bullish puzzle piece. We could switch the S&P 500 into a bearish puzzle piece because it closed below its weekly and monthly open, but I'm going to tell you why I am not switching it just yet. Because this daily candle low maintained the initial low of 40.56 for the E-mini futures contract. This low was 40.62. Because we maintained price action above this candle low, I'm going to make that the make it or break it, whether to turn this into a bearish puzzle piece or not. And so we'll have to wait until next week. But I would still consider this a potential reversal candle testing the 100-week moving average. And what's also interesting, I will also throw this out for the bears, is our weekly candle high was 43.03, and our weekly candle high from last week for the S&P 500 was 43.0350. So we got it just a little bit less. We couldn't get above the previous weekly candle high. Is that a bearish puzzle piece? Who knows? But what we do know is we at least breached the previous week's candle low already, and so we could see a reversal here. We got a nice wick up here, and so I just want to throw that out there. Not much there. It would just complicate things to go more into the S&P 500. But let's just wrap up with talking about Bitcoin right now. We have seen the most amount of volume, for those that were tuned into our video yesterday, enter into most amount of inflows actually enter into the Bitcoin Purpose Spot ETF yesterday, right? And then we saw Terra also buy the dip. So institutions in Wales are certainly buying the dip right now. And we're also seeing liquidations finally. And when we shed off those leveraged positions, it could allow the spot price to drive price action further. And so I think that it certainly is the time to be looking at long positions, especially in spot, for sure, with spot positions below the 600-day moving average. But we may look back at this and say, my gosh, what an opportunity it was for Bitcoin to have came down for a third time below its 600-day moving average. And for the first time, it has at least stayed below its 600-day moving average for a few days, giving people the opportunity. We might look back and say, man, what an opportunity it was to get in right before that third higher low if we start to see this play out. I think that whether it's going to happen this weekend, probably not anything substantial. I wouldn't say that this weekend would garner price action or justify price action above 40,000 just yet. But what I would say is to get to 38,000 this weekend would be a huge accomplishment for the bulls, and that would be very nice to see. And I wouldn't even mind taking some risk here, setting my stop loss at the consolidation low right around that $33,000 level and start entering into long positions, especially if we see some volatility towards 35,000. I don't mind taking that risk right now, because just in my opinion, when it comes to risk to reward here, if we look at a long position, let's just say at 34,788, we're talking about a 3% to, let's say, 20% risk to reward ratio, just if Bitcoin were to come back to 40,000 US dollars and not breach these higher lows. If we breach the second one, that might just be the trick trap and frustrate crew, so that's why I would set the stop loss here. But is this a good idea? We'll find out, snipers. Other than that, I will say this: Ethereum to Bitcoin chart still above 72,000 Satoshis, way and above, so still strong. It would take quite a beating to turn that into a bearish puzzle piece. Bitcoin dominance still selling off, still a bullish puzzle piece. And when we look at the way equity markets played today, we really just got another day of red. It wasn't as significant as yesterday, but what's very good is that the S&P 500 did not breach its consolidation lows so far. This potential reversal candle did not breach it for this week's close. So that's a good thing. And with that being said, Bitcoin is playing inside of the range with a resistance of 36,500 and a support of 34,788. If we get above 36,500, that is the first confirmation that we are going to test 38,000 US dollars. If at any point we breach below 34,788, if it's this weekend, I would be open to taking long positions on leverage. If it happens next week, that might not be the same deal, because if the revolving parts change, if the S&P 500 breaches below its 100-week moving average, then maybe I would be more patient and not take a long position. But if it happens this weekend, it's certainly on my radar. And for those in the Discord, you'll know, as always, thank you all for tuning into the Snipers channel today. Smash the like button for the YouTube algorithm if you support these four-dimensional updates, and I will see you all this weekend. Snipers.